treatment for Hong Kong. He did not say he's going to withdraw from the phase one trade agreement, and the Hong Kong market was actually up 3.4% overnight. However, according to Bloomberg this morning, Chinese officials have told major state-run agricultural companies to pause purchases of some American farm goods, including soybeans, as Beijing is currently evaluating what is going on with the U.S.-China relationship. State-owned traders COFCO and Sino Grain were ordered to suspend purchases of U.S. grain. Also, Chinese buyers have also canceled a number of U.S. pork orders as also. Private companies, though, have not yet been told to halt imports. In Europe, we had PMI, they were all below 50, but sequentially they were better, which is what the market is looking for. Things getting better, basically. Also, there is an expectation that the European Central Bank will announce an increase in its bond purchases when it meets on Thursday. Domestically, we're going to get our PMIs. They should be coming out any second if they're not already out. But I think more to the point, health officials are currently warning that the mass gatherings that occurred during the protests over the death of George Floyd will most likely exacerbate the virus outbreak in the most vulnerable communities. Scott Gottlieb, who was the former chief of the FBI, said, quote, "I think there's going to be a lot of challenges coming out of the events of the past week. One of them is going to be chains of transmissions will have gotten lit by large gatherings." And he says there's really probably no question about that. So kind of mixed news flow. The market, though, don't fight the tape, right?
Yeah, no kidding.
And let's do some stocks in the news.
Sounds good, Lee. Where to begin?
Eli Lilly, LLY.
Yeah, the healthcare stocks really struggling off the get-go this morning.
Yeah. All right. So they said they began testing an experimental treatment for COVID-19 derived from the blood of survivors of the disease. It is the first study involving this type of drug. It's coming out a month earlier than expected and ahead of Regeneron's drug, which is kind of the same thing that's coming out later this month. So a little bit of a pullback to the 50-day, a little choppy.
It's been choppy, but that's an area of interest for sure. I mean, again, it's an area where you can set your risk pretty well.
Yeah, interesting. Amazon.
Getting a little bid here this morning.
Yeah, threatening to break out again. Morgan Stanley raised his price target to 2,800 from 2,600. It said that expects faster growth, even if overall consumer spending weakens. They maintain their overweight rating. Zynga is a popular one, ZNGA.
Ooh, nice move on Friday.
Yeah, nice move on Friday. A little bit of a spinning top candle there, maybe means a little bit of a pause. But they are buying Turkish mobile game maker Peak for 1.8 billion in cash and stock. But the reason they were up also was they raised their guidance for the current quarter and full year also. All right, Edwards Lifescience. EW.
You have ticker on that one?
Yeah, EW.
EW, thanks.
So they split 3 for 1. That's pretty much it on that one, though. We haven't had a lot of stock splits like we did back in the .com era for a lot of these companies. So
No, we haven't.
Yeah. Caesars Entertainment, CZR.
Oops, left one off there. Wow, heck of a rally back.
Yes,
300%
indeed.
move.
Yeah. Well, we've been watching we'll talk about, BJK when we do the
Sure.
sectors, but we've kind of pointed out this. They're planning to reopen Harrah's on the Strip this Friday, and they're saying initial demand on the Las Vegas Strip following other ones that have reopened is much, much stronger than expected. So people are flocking back.
Can't say I'm surprised. I mean, we definitely have seen an increase to trade activity in the last couple of months, and I think a lot of people were maybe out there speculating in the market instead of gambling. In
Yeah.
the casinos, they think they needed something. So
Yeah.
I know that there's a lot of people looking to get back into this casinos. No shit, no kidding about that.
Yep. Okay. Um, let's just see. Oh,
Hmm.
Zoom video.
Hmm. So some of our so-called isolation
COVID
stocks,
stocks. Yeah.
yeah, COVID stocks coming back to import here. Nice move.
Nice move. Um, for sure. They are rolling out stronger encryption to prevent Zoom bombing, which we've probably already heard of. Uh, However, it's only going to be for their paying accounts, not the personal accounts that you can open for free. So you can
That
still get
makes sense.
Zoom bombed if you're using it, but if you're in an institution, probably you won't have those expletives flying across the screen anymore.
Nice. Yeah, that makes some sense though.
Yeah.
All right.
Okay. Keurig Dr. Pepper, KDP. All right. They were upgraded to outperform at Evercore. They noted the strength of the company's results during the pandemic, commodity tailwinds, a strong management team, and the idea that increased working from home would make people want to buy their coffee machines because they can't get their free coffee at work.
Which makes some sense.
Yeah.
I could certainly understand that. Oh, sorry for my dancing trend lines here. I was trying to draw in a little bit of a ascending triangle here that we have just appear to be kind of trying to break out from.
Yeah. I mean, you can set your risk pretty well on that one, too.
Yeah, you sure can. In this case, being, one of the things that I think a lot of momentum traders would look to here, again, as usually, the 10-day. The 10-day coming up through the 200 quite nicely. It's breaking out. It's trying to move to new highs. If it can take out the high here from last week, last Thursday, then you may very well be looking at a momentum trend beginning. In which case, the 10-day would be an ideal or an area where I think a lot of shorter term traders would start to support the trade.
Yep. Let's see. A couple others. Uh, Pfizer. Might be down.
Okay.
Let's see. Yeah, they had a disappoint. Oh my goodness.
Oof.
Yeah, their phase 3 data from their breast cancer trial didn't show any improvement for anybody. So
Boy,
it's bad for the patients and bad for them.
that's a bad gap too, Lee. When you gap the 50 like that after holding every other moving average,
Yeah.
that doesn't bode well. So I would say, keep an eye on that 50-day here.
See how it reacts, see if
Uh,
you crawl back above it or not.
exactly. That's what would make me worried. So,
All right. Beyond Meat.
okay. Fake meat.
Fake meat.
It's cruising. Had a nice little pullback there, Lee. A little bit of a
Yeah, they announced the deal with Yum China to launch Beyond Burgers at some of their restaurants. So good news there.
yeah, this continues to be the conversation going forward is absolutely going to be about the supply chain as well. At least from a actual, protein side of things, actual, physical protein, your beef, your chicken, your pork, etc.
Yeah, let's go. This one's been in the news all the time. Moderna,
Mm-hmm.
mRNA. So up a little bit, kind of running into resistance there, though, maybe. They said that In their vaccine trial, they given in phase 2, they have started actually giving these dosages. So really nothing, just keeping people abreast of what's going on. But no results, just said that they started it.
Pretty interesting tag of the 50-day, Lee.
Yeah.
And that really nice long tail there. It is running it into resistance here initially. So if it gets back above the 10, though, things can start to change, and maybe even again, this 68 area would be the most important area.
Yeah. We were looking at Tesla because we
Yeah,
thought it's been moving, but we searched the news. There wasn't a whole lot other than Elon Musk got his $700 million payout, but it looks like it's breaking out again.
yeah, it certainly does. I'm starting to wonder if there's a little bit of a bleed through on the whole SpaceX conversation
Yeah, it could be.
going on. Additionally, though, I did note this, Lee. Let me hide some of this stuff, and I'll just note how the Bollinger Bands had really tightened up here prior, and you can even see this with the Bollinger Band width study here, Lee. It had been very tight. So Tesla, which is notably one of the more volatile stocks we have in our marketplace, has really tightened up its range. And we both agree and know that volatility is mean reverting. And so when you get tight instances of this tight squeeze type thing, where that volatility is shrunk up, you can expect it to move to break that volatility and become volatile again. The question is always which way. And at least as of today, it looks like Tesla wants to break to the upside here. The most important level in the immediate future here today is this high at 869, which we have taken out already. So I don't know, Lee. It looks to me like traders are eyeballing the prior high at this point, but that doesn't make it a foregone conclusion by any means.
Right.
Any more to add there?
No.
All right.
All right. Looks like a Merrill Lynch was busy looking at the insurance stocks. So let's take a look at some of them.
Okay.
Okay, they put Travelers to a buy, TRB.
Oh, well.
So maybe this will help the financials a little bit. They upgraded most of them. We don't have to look at all of them, but they put a buy on MetLife. They put a buy on Allstate. The only one that looks like they followed that they kept it neutral was AIG.
That would be one to watch. Well, that's of all of them, that one seems to have the best setup in terms of a risk reward breakdown here. If you're liking it at the 10-day.
Yeah. Yeah, but they just kept that one on neutral.
Interesting. Remind me, Lee, what's the insurer ETF? Is it FIE?
KIE.
KIE. Let's just take a quick peek there. We know that financials have struggled, but okay, so this is actually resembling a lot of them, isn't it?
Yeah, I mean it's not rocketing higher, but it's improving. Right. I think you need a breakout of 28 or so though to get this really in gear.
Slight RSI divergence at the matching lows. Might have support in this horizontal area around 26.5 in the 10-day moving average, but I agree with you. Basically, you got to get above 28. Above 28, there's an opportunity to trade the challenge of the 200 up above at some point. All right, what else you got, Lee?
That's about it for stocks that people probably know. So
yeah, I had one more actually that I was looking at that came across the headlines was CrowdStrike, which is
CRWD. They were upgraded at Needham, I think.
Exactly. Needham actually reiterated a buy. They raised their price target from 92 to 105. So CrowdStrike is moving here. They had a really strong day on Friday. As you can see, they broke out. Not quite all-time highs, I don't think, but they appear to be on deck at 101 up there. Now that would be close to the price target at 105. So that's kind of intriguing. Check the details on this one. I think they announce earnings this week though, so heads up.
Yeah,
Okay.
I mean, all those cloud stocks have been on a tear.
Well, yeah, anything to do with software, cloud, and protection of your cloud. That's a
Right.
big deal at this point, obviously.
Right. All right, let's go to the indices.
All right, the daddy of them all, the S&P 500 has broken, as we were talking last week, the 200-day moving average. It is above it for, as we speak, 4 days in a row right now. So we are getting a little confirmation out of things here, and it continues to confound many traders and investors as you watch the news, and you know that many of us are as you were just talking, Lee, with regards to protests. I think that's a foregone conclusion. Of course, there's going to be some outbreaks against a mass of people that are protesting like that. That is absolutely likely. Um, our ability to maintain this level is I would say precariously, but at the same time, I've thought that this entire rally back. So it's not as though I've been on the right side of things here.
Don't fight the tape.
That's a broken record thing, isn't it now?
Yeah, but it's
But
working.
again,
I
I
don't
do think
believe
the
it
main,
either, but I'm long and I'm enjoying this
yeah,
rally. You can't fight the tape. It'll
yes.
when will it end? When it ends.
Hmm.
But it hasn't ended yet.
Yeah, I don't think there's a better way of saying it, Lee, than just to make sure you're protecting yourself. This is absolutely the reason to utilize stop orders. Could you get kicked out inadvertently? Could you lose a position that you want to get back into? Yes, that happens. But your number one goal here, especially if you've been participating in the rally and you're sitting on profits, should be to maintain capital. Do not get over exuberant. Do not get greedy by any means. Pay attention to your trend lines and set your stops, especially if you're sitting on profits. I just feel like a little bit of prudence to what we're witnessing here makes a lot of sense.
Yep.
So the S&P continues to be pretty strong, not quite as strong as the NASDAQ had been. Now, in the NASDAQ on Friday, at least, opened up pretty weak. We bought that up again. They continued to test the short run moving average. We talk a lot about the 10 when things get flying, Lee. And sure enough, the 10 has been held going all the way back to April here on the NASDAQ. The NASDAQ's been our best performer.
Yeah. Let's look at the Qs too.
Sure thing. And in fact, if we're talking about our best performer, we are talking about the NASDAQ 100 even, not just the composite. And that one's almost there at the all-time highs.
Yeah. I don't see any reason I won't go up there either.
I mean, yeah, just through, drift, you could end up there pretty easily. It's only 4 points away now.
Let's see
Okay.
if the Russell's been catching up again or not.
Well, it's our leader today.
Good. Good, good.
Take it. Yeah.
Well, yeah, I guess you have to say that you've now had, in spite of some weaker closes from the open, we still have maintained that level.
We have. And I'm just going to do this. I'm going to change that. That's 5 days above this area. And as such, that looks
Yeah.
like a confirmation. And I'll put support line in there, but if you're looking to, consider Russell here, basically the only time I get nervous is if it takes out the low from Friday, because that was bought up exceptionally well right along the
Yep.
10-day.
Yep.
So that looks like it wants to be maintained and held there. The traders that are on the Russell want to maintain that ledge there around 1370. Under 1370, I'm going to start to change my opinion a little bit.
Yeah, but I would have to say that many technicians would say the Bulls have the edge on this one now too.
I agree. Which is really interesting given the nature of small business right now.
I know it's just nuts, but
I know they're forward looking, but are we 3 to 5 years forward looking, or are we 6 months forward looking? There's a big difference there. Great question from Ray in Texas here, Lee. Can you rationalize why the VIX is up right now when the market SPX is up?
sure,
What's going on?
I think they're buying protection in case the what's going on with all this unrest gets a little worse, I think. I mean, that's what, when the VIX goes up, that's what's telling you. They're bad protection.
And additionally,
It's,
reminder that
yeah,
everybody points out, Lee, whenever we talk about the VIX, the VIX is not a negative a negative review of the market. It's a review of volatility of the market, right?
right.
So
So
it doesn't
I
mean the
think they're
market's
just,
going down.
yeah, I think they're just positioning for more volatility. Usually it's on the downside, but
Mhm.
what you don't want to see though is there's a study we do sometimes on charting the market. You take a look at the 5-day correlation between the VIX and the market. If it starts going higher, uh, then you start worrying a little bit because that means they are hedging harder. So
Mhm.
sometimes a heads up, but this is just one day so far, as far
Yeah,
as
I
we
think
know.
when you look at it, Lee, you've had, what is this, about 2 weeks below 31 or so. I think that's an area to pay close attention to. You start to see the VIX get back up above that 31 range, things are going to get a little bit, just a little bit more dicey, perhaps. So I'd keep an eye on that. Um, all right, let's see. All right, let's do the okay, we did the Russell, we did the S&P, did the NASDAQ. Let's check the transports real fast. Well, starting to get out of their own way, aren't they? This kind of resembles a little bit of a flag at this point.
Yeah.
They haven't taken out. Now there is a ledge. This one should probably be green. And then I'll just put this up here because we ran right to an area of congestion right here. Good RSI action though, Lee. And so I think if you're a trader and you're wondering about, can I, do something with this? I think the 10-day becomes pretty important here. Might be a little easier to look at this with IWM, or IYT, excuse me. We could at least check some volume, but there's your RSI continuing to be strong. Wouldn't say we're plowing into the transports just yet, but you're seeing some improvement. So where road and rail had been leading and carrying the transports, now airline and planes starting to get a little bit back in gear. And this rectangle threatening to break out of this long-term rectangle that we have down here, this nice little consolidation. Notice the 10-day sloping up quite nicely all of a sudden.
Yeah, United Airline this morning said that they're going to cut 13 of their officer positions, and they also said that they're putting some international flights back on in July. So maybe that's giving it a little bit of a tailwind today.
It's an interesting thing to keep an eye on here because it is a very depressed group, of course. But again, I think that the risk of this is of course tied to the opportunity for us to get back to flying at any level of capacity like we were previously. I mean, I know planes are going to be probably more full than many of us would like them to be at some point,
Right.
but they're also not flying as many routes. So, all right, Lee, what do you say to a little sector action?
Yeah.
And before we check out what's working, can we talk real quickly about the stocks, which of course has got some China headline risk going on. It is consolidating quite nicely in here though, Lee, really tightly. This is kind of intriguing to me, the way that it has tightened its stuff up here, hasn't it?
Yeah, it's I'd say many traders would put a buy stop right above that consolidation because of that ticks probably run up to the old high.
1, 2, 3, 4, 5, 6 of them. Yeah, nailed it. 6 days with testing there at that 251 area, 251 to 252, and not be able to break through it. And we are, in the gap here, so to speak, the ledge at 255. So the range is actually about 10 or 11 points here. And that would coincide pretty closely with the highs back here. Actually, not quite, right in this range.
Right. And we had a question on the VIX. Is it just
Yeah.
puts? No, it's a kind of complex formula, but it's kind of a weighted average of multiple SPX calls and puts uh, around the money and out, uh, 37 days or so, roughly. So it's
Mhm.
both calls and puts.
Something else that's a little interesting to me today is the XLK. This is obviously the SOX dragging it down, but it's right at that interesting resistance spot, Lee. Spot you want to see it get through here, if only because I don't want to see a higher low or a lower high, pardon me.
Right. Put up software, IGV.
Yeah, let's do that. You're right. This thing has been cruising right along. There you go.
Ah,
Freak out.
yeah.
I think we would call that a V-shaped recovery. That is pretty darn impressive. You're getting, yeah. So what I find interestingly is you take a situation like this. The market is really feels squirrely. We're moving higher in certain groups, but think about the areas that have done very well here. They're almost to a certain extent paradigm shifting ideas, aren't they? Taking into account the concept that a lot of people are going to be a lot more people in the U.S. will be working from home in the future going forward here. Like we have just lifted a blanket from the workforce. And now, the idea of working from home used to be like a luxury. And I think now it's going to be an expectation. If your company, if I'm going to work for you, if I'm applying for a role and you're telling me that I have limited to no option to work from home, I think that's going to change a lot of folks' view on whether or not that's a company they want to work for.
Yeah, I agree.
So, think about that's the kind of thing that I think has been really interesting about our current situation, and you can see it in the form of IGV here and software doing very very well. The healthcare, as we talked, struggling a little bit for the reasons that you outlined already. Haven't quite gotten out of this range. Tried to on Friday. We popped outside of that rectangle, but we didn't quite get there. So we got thrown back in here today. With the difficulty on Pfizer's news. So keep an eye on this one. Looks like it could still challenge the highs there at around 105.
Yeah, other ones that are moving today we should take a look at
Yeah.
as far as the industry's put up XAR,
Okay.
aerospace and defense.
I wonder why this would be moving today, Lee.
I don't know. But that's,
Excitement, exuberance. We went to space,
I think that's some of it. So you got, yeah, right there. That's 10-day coming up there.
Yep. That's pretty interesting right in that range. Risk reward is good from this spot. Even though, again, that's where I think you want to be focusing is on what's working versus what's not. Broad market. Is the risk reward situation great right now if you're entering the broad market? No, it's far less than ideal. But there are going to be individual groups like this that provide some opportunity short run. I really like that 10-day coming up aggressively, Lee, especially when you consider how it had been below this 82, 72 to 82 range for, was that about 2 months? So get outside of that, start to trend a little bit, use the 10-day as support. I think that's where you have opportunity, perhaps.
Yeah, so put up BJK. We were talking about
Yeah.
some of the, see if that's continuing its breakout. Yep. 10-day looks good there to manage your risk in the short term.
Sure enough. Sure enough. I mean, the 10 has been great on this. Yeah, good support right there. I'm going to move this line up again. There you go.
There you go. So now you've got way to trail your stop is just move those green lines.
That's that. That's a good call, Lee. I think it makes a lot of sense to me.
And let's take a look at metals and mining. Do XME, because I know the copper miners are going nuts today. So are the gold miners.
Really? Hell, if copper miners are going nuts, that's kind of interesting too.
Yeah,
Boy, they like that 50. Nailed that 50 day.
yeah. Put up the GDX now too. The dollar is a little weaker today, which is helping some of these too. Yeah, up
That's
1.5%. Feel better though on this one. You can take out some of those.
yeah, they're like 35.5 to 36 would feel much better, wouldn't it?
Yeah,
And they had worked pretty good for a long time. But the big area of support is this one here, which should be green. So that's the area I think that if you're more of a position trader, this is the range to keep a close eye on, right? And coincident with the 50 day. I would expect the 50 day to continue to be held. If it's not, that would be a shift in behaviors, I would think. All right, Lee. So given what we've seen here, what we've talked about thus far, what are your thoughts about looking in software? I mean, they're going to be
yeah. Let's do that.
essentially at all highs, you know?
Yeah, let's take a look.
Okay.
Maybe some have broken out. You can set a stop under the breakout level.
Hmm. Maybe we can get lucky and find some that are laggers,
Yep.
you know, that might offer a little bit of catch up opportunity, but let's take a look. So let's get into technology, get into sectors detail here. All right, so we kicked out semis last time. So what we're going to do here is keep software, but eliminate everything else. So if you just double check, make sure you've got the check marks in there. Hit save on that. We do
Nice.
want them over last trade greater than 10. Last trade here is over the 10 SMA. So these are the ones that are all trending higher and all trending at their upper levels. Well-rated A's and B's from Schwab Equity Ratings, and then enough volume to enter and exit. And as you said, Lee, 9 to work with some names that we've probably covered a little bit of late. But let's see what we have here. So just right click, hover over open watch list, look for bullish technology, which we know is not just bullish technology, but bullish software in technology. And we will take a look at some of these. Did one of those catch your eye off the get-go, Lee?
Mm. Mm. I haven't looked at CDK in a while. We looked at some of the other ones.
Yeah, let's check that out.
That's a laggard.
It is, but as a trader, I'm always interested when they find those moving averages and they rely on them. This is a nice tag of the 50 on successive days. Recaptured the 50 line in the RSI here pretty much at the exact same time it broke that 50 line, or the 50 SMA, excuse me. The bounce that it got last week came just to resistance. So this looks like it could just be a short-term breather, Lee.
Yeah, I mean, it looks like it. I put that one on a watch list.
Mm-hmm. I think some traders would look at this as a breakout play over 42. And then you can trade the upside momentum to the 200 day at around 46. The key to that, of course, is keeping a stop close below 42 so that your 4-point upside isn't wiped out by a 3 or 4-point downside. So if you're going to play the breakout, put a stop below the breakout but close to the breakout.
Right, Adobe.
All righty. That's interesting that it kind of stalled.
Yeah, it's the previous.
I think these are all-time highs, Lee.
I believe so.
Yeah. Yeah. So all-time highs kind of settling in to maintain the range.
Yeah, I think at this stage, see if it can take out the high from last week.
Right. I don't think there's any reason to get antsy here.
Right.
Um, if you wait for a close above the all-time high, I think you're going to be a little bit more comfortable with it. It certainly will increase the odds of it continuing in that direction than getting it now, because now it could be a pullback that could be far greater than even the 10-day. I mean, it could be a pullback to the prior breakout point here in any way. So just on any short-term weakness. Heck, it was there 3 days ago. So be aware of that.
Okay, next one, FTNT. Somebody
All
wants.
right, Fortinet. Talk about some moves. This thing likes to move, doesn't it?
Yeah. Well, it's recaptured the 10.
Mm-hmm.
So if you want to go for a test of the high, put a stop under the 10, you'd have about 1-to-1.
Yeah, I think the position trader really likes this 121 ledge.
Yeah,
If your time frame is lengthy.
Yeah, that's quite a pullback though. But if you're,
I know. I don't want to give up. I wouldn't want to give up 22 points. Boy, this spot seems so out of place to stop there, Lee. I wonder if that's a Fibonacci retracement level.
put up the 20-day.
Yeah.
There we go.
Okay, there you go. It was a little further away than I thought it could be the 20.
Yeah.
All right. I'll go with that.
That makes sense. So maybe if you're a shorter term swing trader, you'd use the 20 to set your risk, maybe.
Yeah, maybe so. But boy, those candles have been boom, 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 right off the 20 with some. Let's see if the volume came with that. Yeah, it sure did.
Yeah, yep.
I mean, so you can't really be faulted there. That looks like an excellent step in anybody that had the chutzpah to do so along the 20 like that. Yeah, I'd keep eyeballing the 20, I think. I agree with you.
Yeah. If we go back into the screener, Joel says he wants to add IT services to get some more of the cloud stocks.
Sure. Hey, we like to please.
There you go.
Let's see. Okay, well, that added 6 companies. So who do we see in here? We got that added MasterCard,
Yeah.
Oracle.
That was in there. Let's see.
Was it?
Yeah. IT. Let's take a look at IT.
Oh, there is Oracle. Yeah. My eyes are working wonderfully here today, Lee. Boy, that looks. There's that 50. I'm not sure what to make of that chart, Lee.
Yeah, I mean, there's so many ones that are leading. I don't know. Will they rotate into the laggers? I don't know. This is a momentum market. So,
Mm-hmm. I think it's a tough question to answer. The fact that this it's trending. You get a little skew from the couple of days here below the 20-day. The chart looks relatively bullish here. Rally again into resistance before the breather. Made a higher low in the pullback. I could certainly see. If you're watching this, if this is something you're monitoring, keeping a close eye on, trading. Yeah, I could see a couple of levels coming into play. But I think again, this one falls under the category of hey, I've seen some other charts that maybe speak to me a little better. Maybe this is a little more choppy than I'd prefer.
also the volume pattern of the OBV is
It's a good call out too. Yeah, much more, sideways here while trend is going up. That's kind of the opposite of what we'd like to see.
Yeah, let's see. Carlos wants to know how you take a screener output and make it a watch list. So maybe you could show that.
All right. That's fantastic. Good question, Carlos. That's really great and easy to do here in Edge, thankfully. Down here in the lower right, the key is you just need to be on your results tab. So once you're on results, save as watch list comes up for you here. You'll click it one time. And then when you're back over in your chart window, you're going to right click here, hover over open watch list, and all of the watch lists that you have saved will be right down here. Now, periodically, you'll need to clean these out. Okay, so you'll need to get into right click on your tab, go to manage saved watch lists, and start to work and eliminate some of these older ones, because it will only allow you to maintain 20 total in the history. So you'll want to eliminate as you go. But that's how you do it. Okay, Lee. Time for one or two more here. What do you think? Check out ESOD. Now see here, everybody, this is starting to be one that's going to speak a little bit more. Let me put in the support line for y'all.
Yeah, notice the difference in the volume here versus that previous one with the unbalanced line.
Huge difference here.
The charts kind of look similar, but the secondary indicators are much stronger on this one versus the other one.
I would agree. Good risk reward even right now. Maybe you go a stop below the 10-day, stop below the low of Friday, perhaps. And then you're looking at, ditch out around 38. That's $1.50 away. You're looking at about 5 points of upside from here. Actually, almost 6 points of upside from here just to the prior spot. And then you've got a possible gap fill as well. Of course, don't forget about that 200-day. That looms for sure. That's probably an area where some traders would take a little bit off as well.
Yeah. And with that, Kevin, our time is up. What's coming up next?
Well, I think we get a little bit of a break here, but our next segment will be with our we'll be Spotlight on Futures with our Director of Futures. That's Mike Zaremski. He is joined by Jeff Kilberg, CEO and founder of KKM Financial. So that's always a good conversation. I know Jeff is an excellent conversationalist and loves talking market. So that's absolutely going to be one to check out, guys. Don't forget to stick around for that. That is at noon Eastern. And of course, we get Lee back a little later today with Charting the Markets. Who's your co-host for Charting the Markets today, Lee?
Mark Item.
Yeah, all right. So we get a little bit of a balanced conversation. We'll get CFA and CMT chat. Good stuff.
Yep.
So thanks, Lee. Happy Monday to you. Have a great week. I'll see you tomorrow, of course. Everybody else, have a great rest of your week, and make sure to join us in another segment real soon. Thanks, everybody.
So Schwab taught me about four-legged option strategies. I'm gonna go with an iron butterfly spread on that fintech stock.
Nice. I just tried an iron condor.
Oh, only spread I've been introduced to is this onion chive.
It's time to trade up to Schwab, the firm invested in helping you become a better trader. Get commission-free online stock, ETF, and options trades. Expect more from your firm. Schwab, the better place for traders.
Hello and welcome to the Quick Start video for the Chart tool, available on Schwab's StreetSmart Edge platform. StreetSmart Edge has advanced charting features that give you the freedom to customize your charting experience to your precise specifications. Features available include more than 30 customizable studies, the ability to draw trend, support, and resistance lines and symbol overlays, as well as chart types including mountain, bar, line, and candlestick, and much more. First, let's open a new chart by clicking on the Launch Tools, and then under the section called Research and Analyze, click on Chart. The heart of the chart window is the price chart itself. It displays the main symbols chart with your type and style specifications. The Chart Settings panel is accessible by either clicking on the arrow to open the drawer and view all the setting choices, or you can right-click on the chart and select settings from there. Here you can set type and style of chart, add overlays, draw trend lines, and other objects. You can change the colors and more from the Settings panel. You can choose from 3 views of the Chart Settings drawer: Fully Open, Icons Only, or the default, which is closed. Across the top of the chart are chart keys, which represent the symbol overlays, studies, or drawn objects you have added to the chart from the Chart Settings panel. To hide or show all overlays, drawn objects, and studies, click Hide in the upper left corner of the chart. Click Show to display those studies again. You have several options when it comes to chart history control. You can use the sliders. Look to the timeline. There you can see the left and right slider handles, which you can drag to the date or time to which you want to isolate the chart data shown. You can also use date selection, where you can just type or choose from the calendar the start and end dates for which you want to isolate chart data. Click Go or press Enter to apply the date selection. You can use the quick jumps, where time frames and a range of unit sizes are listed. The choices depend on the type of chart you are displaying. Click any of those time periods to display only that period on the chart. And lastly, you can just type the number of days, years, or minutes you wish to view and click Go or press Enter. Trading is available from the chart. The chart trade ticket is available for stocks and ETFs and allows the same actions, venues, order types, timings, special conditions, and brackets as found in the all-in-one trade tool. The versatile tab functionality is also available here in the chart. You can customize and display mini tabs in each chart. You can have them all synced to show the same symbol, set up your favorite time frames, and rename the tabs any way you wish. This concludes the Quick Start Guide for the chart tool on Schwab Street Smart Edge. Please check out the Learning Center and the Online Help Manual, both of which are located under the Help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab and have a great day.
At its core, fundamental analysis answers two questions. How's the business doing, and what's that business worth? In other words, are the revenue and earnings growth improving, stable, or deteriorating, and what's a reasonable price to pay for that company's stock? If you've identified certain sectors and industries to invest in, then fundamental analysis can allow you to evaluate and compare multiple companies within those sectors and industries. You can use fundamental analysis to weed out potentially weak companies and focus on the ones with seemingly better financial strength. Earnings growth is a good place to start when you're choosing individual equities. Keep in mind, when you buy stock in a company, you're looking to participate in the growth of the underlying business, as measured by the earnings per share or the EPS. Screening for earnings growth makes it easy to filter out companies with declining or negative earnings. Revenue or sales growth is another criteria that I like to use. It's often overlooked by many investors in favor of earnings growth. However, recently many companies have grown earnings per share by cutting costs, stock buybacks, and tax breaks. While this method of financial engineering can boost earnings per share in the short run, it can only last so long, and at some point, companies have to grow sales in order to actually bolster future earnings. That's why it's important to consider both earnings growth and revenue growth when using fundamental analysis filters. Valuation is useful when comparing companies in similar sectors and industries because it gives you a good apples-to-apples view. Since the return on your investment will partially depend on purchasing a stock at a reasonable price, valuation measures such as price to earnings, price to sales, price to book, and price to earnings growth are important in helping determine how much you're willing to pay. The financial strength of a company is also important to consider, and one of the primary measures of a company's financial strength is its debt-to-equity ratio, or its leverage ratio. This measures the percentage of the company's total debt compared to its shareholders' equity, similar to a homeowner's level of equity compared to the size of the mortgage. Lower is generally better, and a commonly used rule of thumb is to look for companies with a debt-equity ratio of less than 50%. Incorporating these tools can help you screen for companies with good growth potential, reasonable prices, and strong balance sheets, allowing you to make more informed investing decisions.
Thanks. Bounced a trade idea off my firm. They don't get it.
Schwab shows you indicators, proprietary research, helps you see the full picture.
Speaking of...
Trade up to Schwab. The gut check you want, the intel you need.
Hello, and welcome to the Quick Start video for the Account Details tool available on Schwab's StreetSmart Edge platform. Let's load the tool by clicking on Launch Tools, and then launching the Account Details tool. The Positions tab displays all of your open positions with market and fundamental data for each. Use the Positions tab to close positions, add brackets, or view lot details by right-clicking on the security. The Order Status page shows all order activity, including conditional and bracket orders, as well as the execution details of filled orders. Use the Order Status tab to cancel or change open orders, add or edit bracket orders, and activate, edit, or cancel conditional orders. The Realized Gain Loss tab displays realized profit or loss information for any positions closed during the current day. The Transactions tab displays transactions for the current day, as well as transactions made within the last 90 days. The Transactions View page is read-only, so the data cannot be manipulated, but can be exported for use with other programs such as MS Excel. The Balances tab shows account values, margin information, and more detailed balance information for your account. For a quick, constant view of your balances, the Balances bar is located at the top of your primary layout. Use the Show Hide Balances button in the upper right-hand corner of your screen to display or hide this information. All balances are automatically updated every minute or after a transaction, whichever happens first. The Alerts tab allows you to set up alerts based on price, volume, or time criteria that will notify you in the Messages tool when the conditions of the alert are met. Alerts provide notification only and do not place orders. Use conditional orders in the All-in-One Trade tool to set up instructions that trigger and place orders only when your criteria are met. This concludes this Quick Start guide for the Account Details tool on Schwab's StreetSmart Edge platform. Please check out the Learning Center and the Online Help Manual, both of which are located under the Help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab, and have a great day.
Dividend yield is a ratio and one of several measures that helps investors understand how much return they're getting on their investment. For companies that pay a dividend, you can calculate dividend yield by dividing the expected income, the dividend, by what you invest, the price per share. Take two companies that both pay $1 per share. One stock price is at $30 and the other at $20. The first company's dividend yield is 3.3% and the other's is 5%. The company with the higher yield looks like a better investment because it shows a 5% return. However, a healthy company may attract more investors, pushing the share price up ahead of a dividend increase, which would lower the dividend yield. At a distressed company with a falling share price but unchanged dividends, the dividend yield would go up. But that dividend payment might soon be reduced or even canceled by the board. Investors looking for a stable dividend yield should understand what's driving the yield and focus on established companies with a history of both consistent earnings and growing dividends.
While fundamental analysis can help you decide what to own, technical analysis may help you know when to buy or sell. These two approaches offer distinct strategies, and traders usually align with one or the other. But they're actually complementary, and using them in combination can give a more complete understanding of markets and their direction. If you are generally a fundamental analyst, consider that technical analysis could help you identify favorable times to enter a new trade or exit an existing position in the short term. Because many traders believe the trend is our friend, watching a stock's price fall through its 50-day moving average, for example, could suggest that this former bullish trend may in fact be broken. You can use longer moving averages to help determine breakout patterns over longer timelines. Fundamental analysts may also benefit from another tool used by many technical analysts, volume trends. When you track volume indicators, you may be able to get a picture of how other traders in general see the stock you're following. Again, it's all about the trend. A gain in volume can indicate increasing momentum, while a drop in volume can indicate that traders are moving away and could soon see a reversal in price. Using fundamental analysis alone, it could take months for negative information to come to light, but incorporating technical analysis could help you quickly get a sense of where the stock is headed. Technical analysts can look at a chart and decide to buy a stock based on volume, based on momentum, and price action. But you could be misled when it comes to price action by a company with poor fundamentals. Having some idea of a company's health can help a technical trader develop a solid foundation on which to build their trade. While it does not guarantee success, having another layer of information based on price to earnings, debt to equity ratio, or other data can add confidence to your technical viewpoint and offer another checkmark in your pre-trade checklist. While technical analysis is generally used by short-term traders, fundamentals are often used by long-term investors because market and economic cycles can be very long. If the prevailing long-term trend is bullish, the short-term trader may have an opportunity to join this long-term trend during a period of short-term weakness as price retreats to a long-term trend line or support.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, you get commission-free trades and quality trade executions from the only firm that offers a satisfaction guarantee. Schwab, the better place for traders.
Hello and welcome to the Quick Start video for the Watchlist tool available on Schwab's StreetSmart Edge platform. The Watchlist tool allows you to monitor a wide range of streaming market data like last trade and volume about securities of interest to you. Let's load the tool by going up to Launch Tools and then click on Watchlist. Once opened, to create a new Watchlist tab, right-click on the tab at the top of any watch list and select New Watch List, or click the plus sign next to those tabs. Simply add symbols up in the symbol box that you want to add to your new list, and be sure to name it by double-clicking the title of the tab, or right-clicking and hitting Rename X2 so that it is identifiable going forward. Do you have separate sectors or strategies in mind but want to keep them in the same tab? Create groups within a given watch list and add or remove items by right-clicking on the security or group. You can even move them between groups easily by grabbing the security you wish and dragging it. You can also separate out strategies by opening separate tabs, as well as by clicking the plus sign next to the last tab in the tool. All the information is customizable as well. Columns can be moved around and changed in the tab, or add, remove, and move items in the settings menu as well. Trades can be started by engaging with the watch list. Click on the Bid to load the all-in-one trade tool with a sell limit order loaded at that price. Or click on the Ask to load a buy limit order with the Ask as the limit and change the order to meet your needs. Also, you can right-click on any security to load the all-in-one trade tool, research, or view news on the stock. Have you already created watch lists through Schwab.com or want the lists you create on StreetSmart Edge available on the website as well? Just click on the Sync button. It will turn green, meaning that the watch list you create on Edge will be visible on Schwab.com and vice versa. This concludes the Quick Start Guide for the watch list tool on Schwab's StreetSmart Edge platform. Please check out the Learning Center and the online help manual, both of which are located under the Help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab, and have a great day.
Okay. Bounced a trade idea off my firm. Same old lines. I mean, show me some technical indicators, proprietary research, something.
That's why I like Schwab. They help look out for your blind spots.
Come on, Johnny, you got this, buddy.
Speaking of blind spots.
It's time to trade up. Schwab helps you see the full picture with powerful intel and trading specialists who get it. Plus, get commission-free online stock, ETF, and options trades. Schwab, the better place for traders.
When it comes to identifying trends and trying to pick tops and bottoms, the MACD indicator can be a useful tool. MACD stands for Moving Average Convergence Divergence, and it is based on the behavior of moving averages. Notice that when a stock or index begins to rise, how the faster moving average is above the slower one. What this means is, the more recent prices are getting stronger than prices in the past, it could mean an uptrend is beginning. The reverse of this, of course, is also true. When a faster moving average drops below a slower one, what that means is that more recent prices are getting weaker than prices in the past. It could mean that a downtrend is beginning. The MACD indicator is based on that behavior. It has two lines in its composition. The first we call the MACD line itself, and it is the red line in this indicator. It is simply the difference between those two moving averages on the chart. So when the faster moving average is below the slower one, you can see that MACD is negative. However, when the faster moving average is above the slower one, you can see that MACD is positive. The second line in the indicator is what we call the signal line. The signal line is simply a moving average of the MACD line, and it is the blue line in the indicator panel here. When the MACD goes above its average price, which is the signal line, it could mean that prices are getting stronger and you might be beginning an uptrend. Let's see how we can put the MACD to work. One way to generate trading signals is simply to monitor the MACD line itself. Notice when the MACD line goes from below zero to above zero, that can mean that the moving average is the faster one is going above the slower one, an uptrend may be beginning. Many traders would use that as a buy signal and stay in that position until the MACD line goes from above zero to below zero, and then they might consider selling or even going short. Another way that traders use the MACD is to watch the MACD versus its signal line. When the MACD line crosses its signal line, many traders would use that as an early entry on a buy signal and then stay in that position until the MACD crosses back down below its signal line. Another way we can use the MACD is to try to pick tops and bottoms. Notice generally that when a stock is going higher, the MACD line tends to follow along with the stock. Sometimes though you can see that's not true. Between here and here, notice how the stock went up, but the MACD lines went the opposite way. We call that a negative divergence. What it means is the momentum on the last move higher was made with a little bit less oomph, so we could look for a potential pullback or a reversal. The opposite would be true if the stock continues to go down, but the MACD line doesn't. We would call that a positive divergence, and that could be a potential bottom. The MACD is one of the most popular and widely used indicators in technical analysis. But keep in mind, of course, that no indicator works all the time. you might want to confirm with other technical tools.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
It's time to trade up to Schwab, where you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
The price relative indicator is a way to judge how the stock, sector, or index you are following is performing relative to any other stock, sector, or index. While the word price is in the name, it is only important in relation to the price of the stock, sector, or index you are comparing it to. That's a key point, and one that can be confusing when traders are first using the price relative indicator. Let's look at some charts to see how this indicator works. Remember, this indicator gauges the relative performance, not the price. Here we are looking at two indices, the Dow Jones Healthcare Index, which is the green line, and the overall market as represented by the S&P 500, which is the orange line. Notice that from June till October, both indices were trending higher. We now look at the price relative line, which is the purple line in the lower pane, and we notice that it is sloped up. This means that healthcare is outperforming the overall market. If the symbol you are interested in is outperforming, you will always see that line sloped up. Now let's move over to December. As we see coming off the bottom in December, again, both indices were trending higher, but now we look at the price relative line and it is actually sloped down. This means that healthcare is now lagging the overall market. Remember, if the symbol you are interested in is underperforming the comparison stock, sector, or index, the price relative line will slope down. Let's move on to another example in the same time frame. Here we are comparing the semiconductors, the pink line, to the overall market, again, which is the orange line. Notice from November till the end of the year, while both indices were falling, we actually see with the price relative line that the semiconductors were outperforming. Then when the market turned around, the price relative line is telling us that the semiconductors were still outperforming and leading the overall market. You'll often see this when in a falling market, the stocks that do best when the market turns around are also the ones that can lead. There are numerous ways to use price relative to generate trading ideas. One way is to compare a sector to the overall market. If the price relative line starts to slope up, it means that money is beginning to rotate into that sector, potentially signaling the beginning of an uptrend. You might choose to buy a sector ETF to take advantage of this move. You could also compare a stock to its sector. This allows you to evaluate whether the stock you are considering is a leader or a laggard. It almost goes without saying that momentum traders prefer leaders. Another use is to